Okay, welcome back to the channel. If you found the ICT free course helpful, then that's great, hopefully you did. If you haven't seen it and you're interested, then check it out, just look through my channel, watch any videos you are interested in and need more guidance on, or watch the whole course as a whole. But this video is going to be specifically on ICT's Turtle Soup. These are the kind of rules that I've made for it, and I'll go into them in more detail in textbook setups and chart examples to give you a full understanding of the strategy, how you can use it to your own liking to then take trades and become profitable. So what I've taken from ICT's teaching of Turtle Soup are these three things. The first thing you're looking out for is external liquidity, marking it up, then you're just waiting for it to be taken, and then you're looking for a PD array to enter from. If you're not sure what a PD array is, then I have a video on my channel about it, so check that out first and then come back to this one. But the first thing I wanted to do was just go through what ICT taught in his 2016 mentorship. So this is what he was showing, this is what he showed marked up, and you can see it's from 2011 to 2012. So it was working back then, it was working even further back, and it's still working today. So what we are looking at, this is the areas he marked up. What you can see is when there's like a recent low, for example here, price sweeps it, liquidity gets swept out, and then price moves in the opposite direction. And this happens over and over again. You just need to be able to mark up these key swing points that are potentially going to get taken. So you can see, even though I haven't marked up everything, these are the times where it works. And you can see that time and time again, it repeats itself. Highs and lows get swept, and then price pushes in the other direction. Sometimes it's a quick liquidity grab like this, just a wick of one candle push up, and sometimes you get some accumulation or distribution, in this case, above the high before price then moves down. And hopefully this just kind of gives you an introductory idea of how the strategy works. Simple, just looking for liquidity grabs using recent highs and external liquidity. Okay, so this is kind of the textbook setup that you might look for. Obviously, everything is going to be different on a day-by-day basis, like every trade is going to be different, but there will be similarities across them that you can take. So something that I have actually left out from this list is obviously you always need your bias. Again, if you don't know how to get that, then I do have a video on top-down analysis, the way ICT teaches it, and how I interpreted that to my own trading, so go check that out on my channel if you're unsure on how to do that. But let's imagine in this case our bias is bullish. So first of all, that means we're looking for longs, we're looking for sell-side liquidity to be swept in this Turtle Soup setup. And the liquidity that we could be looking for is either a key swing low, or some equal lows, or whatever you class as liquidity. So in this textbook setup then, what you can see is price is pushing down, creates these equal lows, and then pushes down, sweeps liquidity, pushes up. And that's something that won't be too clear from this chart. You can't see that this is a clear sweep, but when we get to the charts, you'll be able to tell the difference between what is a clear sweep and what isn't. So that is probably going to be the hardest part of this strategy, looking for what a clear liquidity grab is, because when we look at step number 3, you'll see that in brackets I've written there's no market structure shift required for this strategy. ICT doesn't say that you need a market structure shift when trading Turtle Soup. You're just looking for an impulsive liquidity grab and then a PD array. So unlike before, where we could get a change of character and that would confirm to us that it was a liquidity grab, in this case our confirmation is going to come from our discretion and from any PD arrays getting respected. So let's assume then this red box is maybe some volume imbalance. It can be anything, just one of the PD arrays that I've mentioned again in the previous video, so check that out. But you're looking to find the highest probability zone where price will react from, and then trying to take an entry from there, stop loss below the low, target, good risk reward, but target some opposing liquidity as always, that's always a good place to target. Or you can target set risk reward if you want, target a 1 to 2, 1 to 3, that's all up to you, because you're going to have to refine that to the way you trade, and depending on the setup that you get. If you get a strong push up before the pullback, you can just target that high. If you get quite a shallow push up before the pullback, then you might want to target some external liquidity again. But that's the textbook setup, so now I'll get into some real examples. Okay, so the examples I'm going to take are on GBP USD. I'm going to be using the 5-minute for entries, but I just wanted to show you this daily chart. This is where I got my bias from. I'm not going to go too in depth in it, but you can see market structure is bearish, and price is possibly targeting this low here as we're coming down. It could react from any of these order blocks, but from my bias, again going up to the weekly as well, my recent bias for GBP USD since up here has been bearish, and it has continued down, reacting off a weekly supply zone up here, pushing down. So if we go down to the 5-minute then, what you will see is if I go back to the first trade that I wanted to show you, which is on Wednesday, if we just bring up our rules again, what you're looking to do is first of all mark up any external liquidity. So after the Asian session done at midnight Eastern Standard Time, you can look back and see if there's any external liquidity that you can mark up. And this high here looks like a very good place to target. If it gets taken, then price could react from it. This is in hindsight, but if you can't spot that this is a nice high, if it gets taken, then maybe you should work on that first, because that's going to be a very powerful skill that you need to develop. And I will make a video on that. If you want me to, just let me know in the comments. So if I just mark it up, then you can see it clearly got swept. Price just tapped above it and then reacted down within 2 candles. and we're looking for a reaction from this point. It shows a clear liquidity grab. This is clearly sweep, just 2 candles clearly swept, and then you're looking for some kind of PD array to form. And we get pushed down, get some volume imbalance here, lining up perfectly with an order block. So the way ICT does his order blocks is from the open of the candle. So for example, this would be a bullish order block, and you can see price taps into it and then reacts down. So this is a way you can improve your entries rather than just using FVGs and imbalance. Because you could have marked up this bearish imbalance and taken your trade from the start of that, and you would have got tagged in. You would have still had a profitable trade, but you could have refined your entry to this order block by just adding confluences and adding discretion and improving your trades. So then you can either place your stop loss at this high, or to be safer above the liquidity grab, and target this low. Just 1-214, very nice trade, very simple, in and out within like half an hour. And obviously, if you want to add trade management to your trades, you can take some of your profits here and take some at the Asian low in this case. Using session ranges and stuff as external liquidity is very good. But this is the way I interpret Turtle Soup, and this is the way that I use it. Looking for clear sweeps of liquidity and then a PD array to react from. Okay, sorry to interrupt, but I'll try and make it quick and useful. I've started a premium Discord group if you do want to accelerate your trading journey, and I've got a few different options that, depending on where you are in that journey, you can take. So firstly, I've got a monthly mentorship where I do weekly calls, give you my trading setups, as well as support from me and a strong community of determined traders for just $5 a month. I've also got a complete SMC course with everything that you need to know in one place, as well as the strategies that I trade on a funded accounts with proven results. And it also comes with a free 30-minute meeting to accelerate your trading journey and fix any issues you have. And then finally, if you want a more personal approach, then I have a few spots for one-to-one mentorship with monthly or more regular calls and unlimited, pretty much 24/7 access to me. Any questions you have, just send them my way, as well as a tailored learning path that I will create for you to get you profitable. So thank you for listening to that. Definitely check out if you're interested in any of those options, and let's get back to the video. So then the next example that I wanted to show you, and the final example, is kind of similar. You're looking for a liquidity grab and then a PD array. But it's just going to be a different PD array in this case because it's not going to be the same every time that you're looking for. You've got to look for other stuff. And just another thing that I've just seen here, you get liquidity grab there, push up, go back to some imbalance, and then push up again. So these are the kind of things that you can be looking for. But this low for me isn't as of much of a swing point as this high is over here. And this is a very key swing high that you can see once it got taken, price reacted from it and then pushed down. And again, you can see it's a clear liquidity sweep in my opinion and should be in yours. You don't really get a close above it, but price wicks above, another wick, and then push down. So for me, clear push up and push down, that's energetic move and a clear liquidity grab. So if you've seen my ICT course, then you will know what an inversion FVG is. And if not, it's basically when you have a bullish FVG and then a bearish FVG or the other way around, and they line up and it just adds confidence to your trade. So in this move up to the liquidity grab, what you can see is there's 2 bullish imbalances here and 1 big bearish imbalance here. And so for me, this adds a lot of confidence to this FVG that you can take energy straight from it and then price will likely react from it. Obviously, you could try and target the extreme FVG, looking for a trade like this, for example, something like that, or even targeting lower. You can target any of these low points for liquidity, but this obviously didn't get tapped into because when you're looking for these more extreme and higher risk reward trades, you're going to get your orders filled less often because price won't always return all the way and give you that perfect entry. And that's kind of why I prefer to use the start of the imbalance as an entry point. You can see this bearish imbalance, you're looking for the low in this case as a point to get tagged into the trade. And it did tap in nicely, filled a bit of the imbalance, and then pushed down. And even this, targeting the recent low, is the 1 to 2.55% trade. So even though you probably see people getting 1 to 10s, 1 to 20s, they're not doing that regularly. They might say they are, they might tell me they are and be in denial, but you can't take those kind of trades and win them consistently. Yes, you can take those trades and they will win sometimes, but your win rate is going to be a lot lower than trades like this, where you've got a reasonable risk-reward ratio that you can handle without getting emotional about your trading. But hopefully these 2 examples and the textbook setup have shown you an insight into the Turtle Soup strategy. If you have any more questions, then just let me know. Any suggestions, again, let me know. Or video ideas, I'm always open to feedback. So thank you for watching, and I will see you in the next video.